All right, what's up, guys? Welcome back to the Hustle Podcast. My name is John. I'm your host, and we got my co-host,
Gabriel Arambula.
And if you guys are new here, what we talk about on this podcast is everything relating to business, mindset, how we add value to you guys, and also share our 25 collective years of experience in entrepreneurship. Share our mistakes. That way, you know what to avoid in your journey to success. And for today's topic, we do a two part. We do two recordings.
We record
per day.
2 podcasts per day.
Yeah.
For first recording, we usually just talk about, it's like more along the lines of like mindset, self-improvement, business, life, realities of life, and just how to just grow as someone who wants to improve themselves as an entrepreneur or an individual. That's first.
That's right. And we just have a conversation. We're just talking as if how we normally talk to each other during like car rides or just hanging out. We're just sharing like stuff about our lives that is valuable to share with you guys too.
Yeah.
Right? And the second podcast we do is normally around like evening, end of day, where we talk about like business, like
market specific towards lending, real estate, banking, things of that nature. And again, our goal is to add value to everyone listening. And we realize that we may be speaking to brokers, mortgage brokers, loan officers, real estate agents, consumers, and everyone in between. So we try and add value as much as we could. And with this particular episode, what are we going to talk about?
Yeah, we're just going to talk about. So I've been having a lot of calls with LOs, mortgage brokers, where they're mentioning how their business is kind of slow. It's kind of dry right now, and they would mention a lot about borrowers having uncertainty in the market. They're kind of scared to like buy a home or even invest. Like, what would you say to those mortgage brokers and LOs? Like how could they get more business when there's uncertainty in the market right now? What would you say?
You got to work harder. I mean, that's it. At the end of the day, and this happens, all the time in swings in the market, and I've been victim to them as well on the retail side, and ultimately at the end of the day, when the market dries up or it gets a little frosty, you got to get grinding. You got to hustle harder. You got to think outside the box and find out, what you could do within your market to pull more business. And there's a number of different ways you could do that, right? Just simply going back to basics is always going to work. But then also, tying in technology, networking, strategic partnerships, all these things are necessary. And it's like, there's no silver bullet in my opinion. I may be wrong. There may be a silver bullet, but based on what I've learned, what I've seen, what I know, there's really not a silver bullet. You have to do a little bit of everything. And, I've seen business owners go from spending hundreds of thousands of dollars a month on advertising to the market shifting and business decreasing dramatically just due to having all your eggs in one basket, right? If you're just thriving off of one source of business, whether it be one marketing technique, you need to diversify, right? So from an overall like loan officer perspective, a couple things that you want to do in order to differentiate yourself and help increase your business. First and foremost, being a consultant, taking more of a consultative approach with your borrowers is going to be critical. Now, typically, anyone looking for a home loan, any consumer looking for a home loan is going to pick up the phone, call brokers and loan officers, and ask them what their rate is. Okay? Now, any mortgage professional knows that there's a number of different variables that will determine what type of rate a borrower qualifies for. And consumers don't know this. And unfortunately, Mortgage professionals, loan officers, they have the tendency to either, well, let's just put it this way, they may not handle that question the best way possible in order to arrive at a desirable outcome, which is a new client. And one of the ways I would answer that question would be as follows. I would transition that question into asking the borrower a question when I was in the retail world. And the same thing goes for my account executive role now. It's I'm answering the question with a question, essentially, in order to get the necessary information
Hmm.
to provide accurate pricing. So I mean, from a consumer perspective, John asked me what my rate is.
What are your rates?
Oh yeah, they're ranging. Let's talk a little bit about what type of loan you're doing and the criteria that determine what rate you are qualified
Mm.
for. Are you doing a purchase or a refinance? And so just go in to the question asking, let them know that, hey, I want to provide you with accurate information. I'm just going to ask you a handful of questions to make sure I can get you the right pricing or the right quote. And it's a simple switch of going from, well, yeah, our rates this, or right now rates are doing this, to gaining more information, building that rapport with the client as you're asking the questions. You joke around a little bit, build rapport,
Mm.
get their trust, let the client know that you are a consultant and you are taking a look at their scenario, what they may qualify for, and identifying what their goals are. Now, again, with anybody obtaining a home loan, there's a reason they're obtaining it. So identifying what their goals are and doing so, it's paramount, right? Is it debt consolidation? Is it to liquidate some equity, to have some reserves? Are they doing home improvements? How long are they staying in the home? How long are they keeping the loan for? Does it make sense to pay upfront origination, or does it make more sense to structure it as a lender paid loan?
Mm.
Providing options for your client is critical. As a retail loan officer, I was a proponent of structuring loans as a borrower paid loans, in order to really draw specific options for a client on interest rate and closing cost scenarios. And don't be shy to be upfront with your client and let
Mm.
them know how much you make on each loan, what percentage you make, or what dollar amount you typically make on each loan. I mean, set yourself up for success.
Mm.
Being candid and transparent, doesn't hurt. It just really sets expectations and removes any surprises. And so when I was a retail loan officer, I would let my borrowers know what I charge on a loan, and I would break down options on borrower paid and let them know how much upfront origination they would be paying. And depending on their tolerance for upfront origination, we might structure a little bit of a credit in there.
Mm.
And so, from a loan officer perspective, in a time when the business is dry, having more of a, first and foremost, having more of a consultative approach
Mm.
is going to be critical. It's going to be the difference maker. And this is something that top loan officers I've known and worked with in the past all take this type of approach, and it works well for them, and they stay in business regardless of the cycles up and down that we see. Does that make sense as like a
Yeah.
starting point?
Yeah, that makes sense. And I was curious too for loan officers, is it common for them to be transparent with the borrower in terms of like numbers, or not? Not really.
It's really not.
Yeah.
It's
They're,
really
they're trying
not.
to hide something. That's what they do, like lender
Yeah, I
paid.
mean, like it's really not
Mm.
transparent. And you're right.
How
With
come? Like, how come it's not transparent? Do you think?
To be quite candid, I think people are greedy,
Mm.
and they just they want to try and make as much as they can at every opportunity. Which again, I mean, more power to you. That's totally up to you. But again, you have to think about any possible repercussions that might have, right? Because that borrower could get a quote from another loan officer, and if that quote and that pricing is better than yours, you might lose that customer, as opposed to being transparent. I've had clients come back and get a quote from somewhere else, and it was a little bit more competitive, but since I was honest and transparent with them,
Mm.
they gave me a shot to beat it.
Right,
and
right.
and, and 9 times out of 10, the quote was off, or it wasn't even locked, or they're missing something, because it's easy for a loan officer to just put a loan estimate together
Right.
with an interest rate and fees on it. But if it's not a locked loan estimate, it doesn't mean anything. And so,
Mm.
from an overall consumer perspective, you know, consumers, be aware. If someone gives you a loan estimate, if it's not locked, it's almost worthless. Um, and same thing goes with, like, there's different estimates or quote sheets that people send out there. I mean, a loan officer, mortgage broker can put any numbers they want on a piece of paper, but unless you have like an actual loan approval or a loan lock confirmation,
Mm.
breaking down the terms of the loan, such as your FICO score, loan to value ratio, purpose of the loan, so on and so forth, and specifying that the loan is locked and at what interest rate, and if there's a yield spread premium or any credits that are applicable. Unless you get anything like that, I mean, unfortunately, sometimes the best liar wins. And unfortunately, sometimes borrowers get too close to the finish line to pull back. And, they end up regretting it. And in the past, I've even had clients call me after they ended
Mm.
up going somewhere else, asking if I could fix the loan that they obtained, because the person was dishonest with them.
Wow.
Thankfully, that doesn't happen too much anymore.
That's
There's a
good.
lot of regulations and guidelines, but it's very important from a borrower perspective that you're exploring all your options and you're really transparent with your loan officer, and look for that transparency to be reciprocated. And same thing goes for loan officers.
Hmm.
Just being transparent with consumers is critical. We're dealing with their livelihoods, their homes, hundreds of thousands, if not millions of dollars in assets. And so, operating the utmost integrity and transparency is critical, and that's going to get you more business later on down the line.
Mm.
So, again, starting point first and foremost is, take that consultative approach. Be honest and upfront with your clients. Don't be afraid to tell them how much you're going to make,
Mm.
and have those open lines of communication. Aside from that, as far as branching out and getting more business, I mean, there's a number of ways. Now, there, it's not uncommon that loan officers won't do anything extra to gain business. So, for example,
Mm.
most loan officers might have, depending on what type of company they work for, they may have like a lead distribution system, whether
Right.
that be inbound calls, whether that be internet leads, and that's great and that's fine, and you're going to get business from there. However, you have to do more than that.
Oh yeah.
You have to do more than just rely on one lead source. So, a couple of things that come to mind, and this first one, I believe, is practice adopted, more commonplace now than previously, but your database is it's gold. It's the most valuable thing you have. Your past clients,
Hmm.
your friends,
Your book
your
of
family
business.
members, your
You
book
know.
of business. Now, that book of business is only as good as the quality of business that you conducted.
Mm.
So if you
Yep.
didn't treat your clients right, that book of business is worthless. Hopefully you treated your clients right, and you can utilize that database to pull more business, because you have to stay in front of your clients in order for them to do business with you. It's not uncommon that you know someone in the family got their loan officer license, started working for ABC company, and now they want to do their family members loans, and now your client wants to help their nephew out because he just got started but he doesn't know what he's doing, and he's got John Smith watching over him, and John Smith is only getting a fraction of his commission, and he's not happy, so he's not going to attend to the file, like all these different things. So again, the second thing is, really utilize your database. to get more business. That means calling your clients, that means emailing them, sending out birthday cards,
Mm,
anniversary cards, delight and surprise. Send them a gift, something they like, whatever
right.
the case may be. Having database management on lock, maintaining close communication with your sphere of influence is going to be a big time win. And there's nothing like that referral business. It's
Oh
great,
yeah.
great deals, great people to work with.
Yeah, it's like constantly like nurturing your book of business.
Mm-hmm.
Like when you sell your client or you have a client, right? Like don't just think of them as a one time deal, like one and done.
Mm-hmm.
Look at them as like the lifetime value of that client. Because if you do, as long as you do a good job, they can refer you more business, right? They
Yep.
can refer you to the right person, and
Mm-hmm.
then you provide exceptional value to that person. It's gonna create a snowball effect for you, right? And then imagine
Snowball effect.
imagine having 100 clients that you went above and beyond for, like you're good for life basically,
Mm-hmm.
right? As long as you did your job initially, like how you mentioned, like that first sale you did with your client, like how'd you do? Was it just transactional? Did you actually care about them? Were you transparent with them? Like how did you make them feel? How was the process for them? Was it easy for them? You
Mm-hmm.
know, and that
100%.
that that not just applies to like mortgages, but any business too. Like when I was doing life insurance, I had a bunch of clients, right? And I would nurture that list like
Yeah.
over and over again. Like even just call them, just say how you're doing. How's your dog? How's your kid? Right? And like make note of your clients like personal life too. When you call them back, you can bring it up. And then when you bring it up, they're like, oh dang, this guy is different. Like he actually
Yes.
remembers. Little did they know
100%.
that you took notes, but
And
but
those
it's
clients end up,
yeah.
becoming friends,
Hmm.
right? You get clients that you build those strong relationships with, and it's great. It's a great feeling. I love working with those people. It's like you're just helping friends and family. It's no
Yeah.
longer a business transaction, but it's a labor of love. Um, so database is huge. Another thing I see top producing loan officers do a good job at is really building relationships with realtor partners. You got to
Mm,
think about it.
yeah.
Realtors are out there selling homes. Majority of people that buy homes finance them. So having a good relationship with multiple realtor partners is going to be critical. And I think oftentimes we forget to add value.
Mm.
Like, what can you give these realtor partners? A lot of times we might just call them and ask, "Hey, do you got any loan? Do you got any borrows, any pre-approvals?" Right?
Yeah.
But it's got to be more than that, right?
You sound just like every other loan officer or mortgage broker asking the exact same thing. It's like you want to figure out how could you stand out, and what Gabe mentioned, like how could you add value to them? Like when you call your realtor, like genuinely get to know them. Like how can you like add a value to them, like support them in their business. If you're able to be an asset to them, like you give first instead of
Mhm.
taking, like they're going to see that, oh dang, I can actually work with this guy. He's a genuine person that wants to help me in my business and not just take, right? And then from there, through the law of reciprocity, they're going to want to give you business,
Oh,
right? They're gonna think
100%.
about you.
Yeah, and I think like a couple of things that you could do to add value to any realtor partners is collaborative marketing efforts, right? So first and
Mm.
foremost, one of the things that I highly recommend to any loan officers out there looking to build those relationships with their realtor partners, you want to hone in on what type of business or what type of client that they typically work with. Is it a first time home buyer? Is it an investor? Are they seasoned home buyers? And then identify what type of loan products would best suit their client base. And then from there, work on putting together any type of marketing or informational material specific to the loan products that realtor's client base is likely to utilize. So for example, if they're helping out a lot of first-time home buyers, you may want to look into a down payment assistance program. At the
Mm.
lender, we have a great down payment assistance program that has a first mortgage that's an FHA loan. We fund the second mortgage in-house. We have an option that gives a 3.5% second or 5% second. The 5% second offers 1.5% of the loan amount to cover closing costs. So, that's a great feature for first time home buyers where there's no down payment and they get a little bit of cash for closing costs. If you have a client that works with a lot of investors, you want to make sure that they know about our DSCR products, right?
Mm.
Otherwise known as our NONI product, non owner, no income product. And that product right there is a phenomenal product for investors that's going to get investors into those properties or allow them to refinance those properties, take cash out so they can buy additional investments. If your realtor helps out a lot of self-employed borrowers. At the lender, we got a lot of great alt doc programs, which will enable you to use bank statements,
Mm-hmm.
1099s, profit and loss statements, assets to qualify.
Mm-hmm.
There's a slew of products out there, and this is where, as a loan officer, becoming a consultant is critical in identifying what loans work best for each borrower. So now it's you're taking it to another level with your realtor partners, clarifying solutions that you have readily available that best fit their client base, but you're also expanding their horizon because most realtors aren't privy to the loan products that are out there. And as a loan officer or a lending professional, looking out to build these relationships with these realtor partners, you got to know your products and you got to know your options. And time again, like how many times do you talk to a loan officer and they say that they just do conventional loans or they don't do
Way,
non-QM?
way too many, right? Whenever I talk to LOs and mortgage brokers, they've been in the business for quite some time, but doing so, they're used to use one product, like more like agency loans, or their business is 90% conventional. They do FHA as well, but they're missing a lot out on a lot of business, especially when their conventional loans get like denied, right? If they actually had like alt docs, like bank statements, non-QM loans, P&Ls, they would have made they could have been able to transfer the denied business to the non-QM side of things,
Yeah, which
right?
which brings up a good point, for any loan officer that's out there, any mortgage broker that's out there, I would challenge you to take a look at your fallout, or the deals and leads that came across your desk over the past 30, 60, 90 days. Why couldn't you get the deal done? Are you sure there's not a way to get it done?
Mm-hmm.
One of the things I learned being in the lending business is the person who comes up with the most solutions is the person that's going to close the most deals. And the great thing about those files that require some critical thinking is you'll find that there's less competition because most loan officers aren't willing to do the work, or
Mm.
they've just gotten used to agency loans. Now, with non QM loans, it's going to offer you a wide array of options. And so, again, going to the second key in building relationships with realtor partners, knowing your products is critical. Go through your fallout, see if there's anything in there that you might be able to restructure and fund. In addition, to building relationships with realtor partners, do open houses with these realtor partners. There are buyers
Mm.
walking in these open houses. A lot of these buyers are not pre-approved for home loans yet.
That's smart.
It's a great source of
Yeah.
business, and when they see that you're linked up with one of the top realtors in your area at an open house, that will build credibility with you. Third thing that you could do to help build those relationships with realtor partners: go door knocking with them. You would be surprised, the interactions and the leads that you'll get by door knocking, especially right now where there's a lot of uncertainty in the climate of the real estate and lending industries or in the economy as a whole. You'll find that a lot of folks are more prone to opening up conversations. They're curious. They want to know what's going on. Are they decreasing the interest rates? What's going on in the economy? Are house prices going to drop? Are they going to keep rising? Um, right now is an actual good time to go out and door knock and talk to people. Get belly to belly with people. Talk to them, right? And so, again, manage your database, your sphere of influence. Take great care of it when it comes to realtor partners. Form,
Mm.
form those relationships. Get outside the box. And third thing, network with people. I network with people all the time. People will hit me up on Facebook. They'll see
Yeah.
me, posting a video of me skateboarding or something, and come to find out they're a loan officer, and
Mm-hmm.
you build that rapport, build that relationship, and maybe you end up doing business. Same thing with loan officers and realtors, right? Go out and network. Go to these networking events. You never know what's going to happen or who you're going to meet, and especially in a time where business may not be as poppin' as you'd like it to be. You got to do everything. You got
Yep.
to do everything that you can within your power to drive that business. And those who double down in the tough times are going to win big. And
Mm-hmm.
that's one of the things that I've noticed in this business. The individuals that double down when the time is tough, they win big. And listen, I know it's been a rough few years. The mortgage rates started ticking up towards the end of 2022, about October, November 2022. And they haven't gone down since. There's been peaks and
Mm.
valleys, but big picture is interest rates are actually at a good spot. When you look at historical data and historical averages, we're not at a bad spot. Everyone's just freaking out because we don't have pandemic rates anymore.
Hmm.
And
5%
again,
rates.
yeah, well,
5%.
dude, two.
Crazy.
I mean, like I think I closed like a 1.875%, like 15-year fix or something. Yeah,
Damn.
it was insane, dude. We're never going to see those rates again, but it takes um, seasoned, confident, educated professionals to educate consumers, letting them know, listen, you're never going to see those rates again. If you wait, rates might go down a little bit, but home prices are going to
Will
go
go
up.
up.
So if you're
Mm-hmm.
looking to buy, lock in a low price now, and later on down the line, talk about refinancing. In the beginning terms of the loan, you're just paying all interest anyways. So, something to take a look at. We got to educate these people, but I think ultimately, three keys in having or helping loan officers and mortgage brokers grow their business is, your database.
Mm-hmm.
Beat that thing up. Figure out how and what you could do to stay in front of your database. Um, Realtor partnerships, huge, 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 huge. Realtor partnerships are going to be critical. Three, networking. I think with those three items right there, that will get you to where you need to get headed. And I think through these partnerships that you form, you'll get more ideas. I mean, we didn't even talk about like the social media stuff.
Mm-hmm.
Um, First time home buyer seminars, doing first time home buyer seminars live,
Mm-hmm.
running social media ads, using AI. The list goes on and on and on and on. Like the things that you could do to get business are countless. But the most important thing is if business is slow, you got to get going. You got to get doing. I mean, listen, we know the state of the business, and we know it is improving. We see the numbers within our company increasing, and it's a sign of things to come, which is why we're doubling down. I mean, we're recording 2 podcasts a day, in the office on the grind, 10 to 12 hours a day,
Yep.
on the phone, making calls, doing broker presentations. And I mean, this is something we'll even do for brokers too, brokers and loan officers. If you have realtor partners that you want to do a
Mm-hmm.
presentation for, partner up with us and we'll do a Zoom presentation
Yeah.
with you
We're more than
covering.
happy to.
Yeah, we love
Yeah.
doing that stuff, and we'll cover high level products that are pertinent to that particular real estate office. That's what it's all about, and the more the more that we do, the greater results we'll get, and we have to pivot accordingly. Double down on what's working. If it's not working, pivot, adjust, move
Mm-hmm.
forward. But staying idle is not going to do it for you. We got to be active right now.
Yep.
Got to be active in the field.
Just like in any business, like in order to actually double down as well, you have to look at why you're also doing it. Like, what's your main goal for actually doing more than what the average person would do, right?
Yeah, no, I mean, yeah, that's
I,
critical.
I'm sure, right? There's a lot of LOs, mortgage brokers out there who may have like dry business right now, but look at it for yourself. Like do like an evaluation, right? Like, are you actually doing everything you can to get more leads, get more business? Are you nurturing your book, right? Are you calling friends, family, marketing yourself, putting yourself out there, right? If you're not, then I suggest figure out like why aren't you doing it? Are you motivated enough? Do you have a big vision for yourself? Do you actually want to be a successful LO mortgage broker long term? If not, then that's fine. You can do something else that you align with. But if you're the kind of person that really wants to make it big in any business, especially the mortgage space, then figure out what drives you
So yeah,
truly,
you figure out
right?
what drives you, self-reflect, analyze your business, be honest with
Yeah.
yourself, but don't just sit there hoping
Yep.
that the rates will change. Every time I hear a loan officer saying that they're not in the business anymore, I'm like, man, why?
Because
Dang,
it's too hard, too
yeah,
stressful, but
business slow down? Like,
you know,
is there anything you could have done? Like, and again, I mean, it's hard. That happens.
mm,
That's how business is. So it's always going to be hard. There's always going to be something. Always going to be something. Just don't give up.
that's why we have the general podcast too in the morning, because a lot of success from business is mindset, like
It's
mindset,
everything,
personal growth,
man.
because your business is a reflection of you, right? If you're not working on you, if you're not taking care of you, then your business is probably not going to be taken care of as well.
100%, man. Couldn't have said it better myself.
Yes, sir. All right, cool.
Indeed.
That's
I
good.
think it's a wrap, man. Episode number 30.
I guess so. Episode number 30. Number
Woo
30 it
woo,
is. Yep, yep.
30.
Yeah.
Dang, man.
Well, if you guys enjoyed the episode, hope you guys, make sure to leave a like, comment, let us know what you think, subscribe. If you guys gain value, share with your friends. If you guys want to have a chance to be on a podcast or work with us
Tap
on
in.
loans, tap in. Our information is in the description of below and also in the bio above. So,
Yes, indeed.
anything else you want to share?
No, that's it. Stay grinding, stay positive. Get that paper. Paper ain't gonna get you.
That's right.
Mm-hmm.
Let's
All
go,
right.
G.